Hi viewers, you're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. 77 points lower on the Nifty, 23,235 right now. Well, what is dragging the Nifty right now is the IT stocks, the banking stocks. The Nifty Bank is also down by 1.4%. So you're seeing some dips on that account. Autos have slipped, PSU banks and financial services. These are the drag points as far as the markets are concerned. When we look at the outperformers, you still see oil and gas about 1.7% higher in trade. Then you have Realty, metals, infra stocks, Nifty 50, Nifty Next 50 stocks that are actually hovering higher in trade right now. Top movers include Reliance Industries. You also have BPCL, Hindalco and SBI Life as some of those outperformers in the markets right now. When we look at the top drags, again, no surprises there. It's Infosys, almost 6% down. Axis Bank again post earnings, which has been weak and below estimates, 4.4% of a dip. Shriram Finance, Kotak Mahindra Bank and M&M are the other top drags in the markets right now at this point in time. When we look at the F&O space, there's some interesting move there. You have HAL, IRB Infra, Hoodco as and also Hindustan Copper as some of those PSU stocks that are actually finding a lot of momentum. On the downside, apart from Infosys, you have even Kalyan Jewelers, Varun Beverages, Axis Bank as among those which are dragging as far as the F&O action is concerned. We'll now welcome our guest on board. We have Mr. Avinash Gorakhshakar, the Head of Research at Profit Mart Securities, joining in. Warm welcome to you, Avinash, and thank you so much for joining in. Well, a lot of earnings that are coming in, so we'll straight away dive into that to see how have you assessed and what does it mean for retail investors. Let's start off with the IT pack. That's definitely reeling under pressure. Infosys, do you see the numbers were as bad? I mean, the reaction is 6% down. What do you think has been the biggest disappointment for investors in Infosys?
No, I think my guess is Sakshi, numbers were definitely better than the street expectations, but I think there was some indication by the management that the fourth quarter numbers could be slightly muted or there could be a little degrowth in the fourth quarter, and plus margins could come under pressure. And I think the stock had run up quite significantly ahead of the results. So I think clearly none of the management was able to clear whether they could possibly say that after Donald Trump takes over charge as the new president, one could see a big kind of flow of incremental orders. So I think markets are probably in wait and watch mode. Whatever had to happen has happened. I think the markets are clearly looking at consolidating and possibly encashing some of the gains which immediately came once the results were announced. So I think it's not that fundamentally there is any kind of problem, but yes, I think markets are now in a very cautious mode with the kind of liquidity FIs are pumping out in the Indian markets. It's quite obvious that wherever they have made a decent amount of money, they want to exit out. So I don't think fundamentally anything is wrong. The guidance has also been improved. So I think probably after this 5-6% correction, there could be some value buying. But yes, I think clearly I think markets are not happy with the with the numbers. They wanted a better guidance, a much more aggressive stance on the order book kind of scenario, which I think was lacking. And I think prices had gone up quite ahead of the numbers. So, all these things cumulatively resulted in this kind of fall. And I think it's going to be stock specific. So I think clearly, whenever the numbers are in line or maybe below expectations, you're going to see a little bit of profit booking, which normally happens post the numbers.
Okay, got that. Let's take another one then from you. Reliance Industries is something that Avinash I wanted to understand particularly. We've seen last 1 year there was a dip of almost what 4.5, 5% in Reliance Industries. First one in the last decade that we've seen for RIL. What goes next for Reliance Industries? Do you see after these earnings and 3 quarters of weak performance and now finally showing us some upside, things could look up for this one?
Yeah, I think in case of Reliance, Sakshi, if you observe, that the stock had underperformed significantly. In fact, the stock had come down to near its 52-week low. So, exactly the opposite of what happened in IT stocks. This was a company which was beaten down very badly, and numbers came in much better than expectations. The 11% increase in profits for Reliance is not a bad number at all on a higher base. And plus, if you see their retail business, their Geo telecom business, they have done exceedingly well. So I think the markets were quite happy with this number, although one can clearly say that, for a stock like Reliance, it's difficult to take a very big bump up on the stock price. I would believe that maybe the markets now would look at possibly the next financial year as the trigger year for some sort of value unlocking, which I think the markets are expecting for a long time, specifically from the retail business side or from the telecom business side. Already the geo business is hived off. So I think these two triggers, in the forthcoming year, if they fructify, then I think you could see a further re-rating. But yes, I think around 1300 odd levels, this can be a good portfolio addition, provided one is willing to give in the next 12 to 15 months in this stock.
Got that. So that's the view that's coming in. Also, Avinash, just wanted to get a sense on the banking space as well. We saw Axis Bank numbers coming in again weaker than estimates. Poor show coming in. A lot of brokerage houses are now penciling in lower targets for this one again. At the beginning of the new year, when we were speaking to all of you, most of the analysts did have this viewpoint that financials is something that could do well in this year. How does one then continue to navigate their preferred stocks within the financial space, even when the earnings are not coming to expectations there?
No, I think yesterday what was important from the Axis Bank management commentary was that they made a very clear assessment that when the economy is slowing down, it's going to be a challenging period for banks. And I think with a 3 to 4% jump in the profits, Sakshi, I think this is not a number which could re-rate the stock. So I think markets were initially happy with this inline market expectation, but the number was no way a kind of a bumper kind of quarter, a very strong quarter. So I think to a large extent, Axis Bank did manage to show 3 to 4% growth in the bottom line. But I think these numbers were not enough to excite the market. And I think that is the reason today you have seen a sell off. My sense is that even the fourth quarter is going to be challenging. It's going to be tough because credit growth has slowed down. Deposits, are hard to come by. So I think cost of deposits are also going up. So I think it's going to be a pretty strong challenge until and unless the economy picks up and there's a bigger kind of aggressive push by the government in terms of infra projects, private capex picks up. So I think till that time, most of these banking companies, specifically the private sector banks, which trade at a premium to the PSU bank, they could be at best be market performers. So I think we'll have to wait for at least another couple of quarters before we see some recovery here.
Okay, so that's as far as the banks are concerned. Now, the immediate next trigger that the markets are looking forward to, Mr. Gorakshakar, is also Donald Trump's assuming office on 20th of Jan. Before that, we've already seen so much of volatility at play in the first fortnight of the new year itself. How are you really assessing what could be the impact once Donald Trump assumes office? What is it that is worrying the markets at this point in time? Could there be further weakness after he assumes the office as well?
No, I think, see, Sakshi, if you remember, in this previous term, when Donald Trump was the president, he has a habit of creating news virtually every day on his Twitter handle. And the markets obviously don't like this kind of uncertainty. So, we have got to be prepared for this kind of market. One day he may say something, the next day he may say something else. So, I think clearly what the markets initially are worried is that he might impose a lot of tariffs on certain countries. He's already told the markets his viewpoints on Canada, on the Russia-Ukraine war. So I think when the U.S. president talks this kind of language, obviously there is a kind of concern, and I think India also would obviously observe very closely what kind of policies Mr. Donald Trump spells out for India. Although on a very conservative basis, I think India may not get that kind of impact like what China may get. But I think the markets would like to wait for the final viewpoint from Mr. Trump itself. Now, before before he assumes office, there are lots of expectations that this may not assume the right proportion. So I think that's why the markets are a little scared. But typically, I think India, we may not have to worry that much. But yes, there could be some tariffs on some items which possibly could impact our export potential. That's the worry. And clearly, with the dollar appreciating, the rupee weakening, as it is, the economy is on a weak wicket. So, that also goes against us.
Okay. And what about the FII flows, Mr. Gorakshakar? They've still been, away from India right now. What is it that you're expecting on that front? Will this outflow continue to go on even once Donald Trump assumes office?
No, I think, Sakshi, bond yields still are around 4.6%. So, foreigners, basically the FIs have got a good incentive to invest in the bond market. So I think, unless we see bond yields coming down below 4%, I think it's unlikely that, FI flows will start in a big way, because clearly with the rupee weakening, fresh dollar inflows are definitely not going to come easily. They have encashed some of their profits and obviously made money on the currency side also. So my sense is that for the next 3 to 4 months, maybe till April or May, unless the currency stabilizes, and obviously the interest rates in US also come down. I think the good news is that bond yields have started coming down in US. Inflation is down, so I think hopefully April May could be a time when interest rates from the Fed could see a big rate cut, and that could be a trigger point for the FIs to put money in emerging markets like India. So till that time, I think we'll have to face the onslaught of sell-offs.
Okay, got that. Let's also talk about the domestic key trigger that we are all waiting for, the upcoming union budget now, Mr. Gorakh Shakar. What is it that you believe markets are expecting from this upcoming budget? Do you see anything that the government could do in terms of any policy changes that could revive the spirits in the domestic markets and the retail investors?
No, I think clearly, Sakshi, after last year's budget, I think the markets are really not having very high expectations from this budget. Uh, Most people are saying that if something negative doesn't come, that itself is a big positive. I think clearly, there were some news reports that possibly GST could be extended to various other smaller ticket items. Now, that was something which sent shivers to most of the, industrial kind of, companies, because clearly, I think the markets are looking at some sort of support for consumption, for, more purchasing power with the middle class in India. So I think if the government really wants to give a boost to the capital market and give a boost to the overall market sentiment, I think they should focus on consumption related initiatives. They should also encourage capex related activity, and most importantly, they should not give any negative surprise for the capital markets. Like last time, apart from the taxes on on the option side via increased STTT, they also increased the long term capital gains tax. So I think that was completely unintended, and it did not meet the desired kind of objective. So I think these kind of things, if the market does not get in this budget, I think the market should definitely get a sigh of relief. But consumption is something which I think if they do make a conscious effort, then I think that's going to help overall the economy also to grow. So I think we'll have to wait and watch. But overall, I think no negatives itself would, if they come, that will be perceived as a positive this time by the markets.
Right. No negatives will be a positive in case the budget has to be seen. But again, in the run up to the budget, there are several favorite sectors that again garner a lot of investors' attention. Today also you see a lot of defense names that are buzzing in trade. HL, for instance, is 5% higher. You have these railway names that are buzzing in trade as well. IRCTC, IRFC, all of them up and about in trade as well. You have the fertilizer names that have been doing well since morning trade today. What is your own suggestion to retail investors who are looking at these key pockets in aspiration of higher allocation, big announcements coming in that could impact this sector, sir?
No, I think see railways and defense are definitely areas where a lot of money will be spent. In fact, a couple of days back, I think RVNL got a 9,000 crore order. Then I think Bharat Dynamics got a 3,000 crore order. So orders are flowing very well, and the government wants to encourage domestic production of defense items. So that gives a significant scale up opportunity for domestic players. As far as railways is concerned, also I would not be surprised that the markets definitely would be pleasantly surprised if there are some more tenders given out for wagon companies, typically for rolling stock. And I think clearly the market is also looking at the fact that railways is in expansion mode, especially on new trains, which come under the Vande Bharat, kind of category. So I think you're going to see a lot of noise around these two sectors, and that's the reason you're seeing a lot of buzz in these stocks. But I think clearly, my sense is that sectors like cement, capital goods, or for that reason, agrochemical, like you mentioned, fertilizer. These are sectors which affect the masses. So if here the government announces some reliefs, specifically on raw material kind of concessions, or maybe on the end product GST categorization, that would help these sectors, and I think that would be a good opportunity for these sectors to outgrow in the coming financial year. So I think we'll have to wait and watch, but I think it looks the typical theme: infra, agri, as well as defense, railways. And I think mass consumption. I think if consumption is given the benefit this time in this budget, then I think it will signal the government's intent that they really want the middle class to actually come and spend more. And for that, obviously, incentives like increasing the standard deduction or increasing the tax slab, which I think are long overdue. So these things I think will boost up the market sentiment.
Yes, well, long-standing demands. We do not know whether this time also Finance Minister will pay heed to all of them, something that could bring back cheer to the D Street. But if I have to ask you, sir, largely if we look at the overview on the markets, not everything is looking very great. But do you still see 10, 20, 30% of the market still giving you that opportunity to probably make an entry at this point in time? What are you picking up in terms of specific pockets there, sir?
No, I think clearly, whenever the market corrects, I think it's a good strategy not to invest your entire capital in one go. I think one can also look at buying in a, in a SIP kind of strategy. And I
Okay.
think now, Sakshi, one thing is very clear that return expectations have to be moderated. So, what money investors made in the last 2 years, I think you'll have to cut down your return expectation and take a slightly longer term view. I think investors post COVID have been those investors who have always seen a trending market. They've never seen a bear market. So I
Correct.
think this is not a bear market, but I think these kind of corrections are now going to be part and parcel of the market. So one has to be very, very agile, very, very ready to accept that stocks may not go up that soon. Indian economy will grow. I think one bad quarter for the GDP does not mean that foreign inflows will never come to India. I think once they start, the sentiment could change overnight. But yes, I think if you keep a return expectation of 15-20%, then sectors like real estate, capital goods, housing, then cement, typically construction companies. I think all domestic focused companies should do well. So I think that is one area where possibly these are not impacted by the weak rupee, and I think demand definitely will continue to grow. So I think one has to be little selective, but at the same time keep expectations little moderate and lower.
Keep your expectations a little moderate in this kind of a setup. But are there also any pockets which you find extremely risky to be in right now, sir?
No, I think, see, my guess is in terms of risk, I think clearly, the metal sector, which is yet struggling, I think that is one sector which is purely a momentum sector. And clearly, I think luxury, kind of product segments, typically across product categories, that is one segment where possibly, demand initially gets eroded very fast. That is one segment where I think one has to be a little careful. I think we have seen some sort of sell off in some jewelry companies. Now, we don't know what are the real reasons, but I think a stock loses 35-40% in just about 14-15 days is something which one needs to be very careful about. So I think clearly that is something which is not positive for the market. My sense is that metals, because unless and until the China comes and starts buying in the metal market in a big way, these stocks are not going to go anywhere. The other laggard sector, that is IT, unless and until we get some clarity on the new order pipeline, expectations. I think IT is one sector where for a long time expectations have been built in. But I think we need to understand what's the US policy, how things gear up for the US economy as a whole. So I think clearly, till some clarity emerges, maybe for the next 2, 3, or maybe 4 months, these sectors would still remain market performers.
Also, sir, wanted to ask your fresh approach on the mid and the small caps. Once it was being seen as the golden goose, and it's now suddenly turned out to be an ugly swan after the recent consolidation and correction. Everyone is being hit with volatility. Those that were big on mid and small cap funds, mutual fund investors, they are feeling the wrath of the market sell-off and sharper dips being seen in these two pockets. Those that were heavy on these particular stocks in their portfolios are also seeing sharper cuts in their overall portfolio returns. How are you advising investors holding on to such stocks within the mid and small caps basket?
No, I think, see, in the mid and small cap market segment, I think, you need to take a little more risk appetite in your portfolio. And I think you need to give in a slightly longer time frame, because, see, one must understand that, here the reward is much better, but the risk appetite has to be higher. The volatility in these counters is also extremely high. But as I think if investors have made money, they are technically very solid enough to, bear the underperformance for some time. We know many investors who have made huge amount of alpha in these kind of stocks, and therefore now this fall in the market has not bothered them. But yes, I think if you have a slightly medium to long term horizon, then only one should invest here. if you have a horizon of less than 1 year or maybe 1.5 year, then I think maybe the markets may not give them a thumbs up initially. But ultimately, it's going to be the data and the performance of these companies. If these companies deliver very strong earnings growth and obviously can deliver on good ROEs, then I think the markets would not ignore them. But I think it's going to be a long way. I think you've got to give a lot of patience and conviction here.
Okay, got that. We'll see a few momentum stocks also right now, viewers. The one on my radar is KR and Heat Exchangers. That has shot up in trade today, about 6 odd percent. And the news that has pulled up this stock today is that ace investor Mukul Agarwal has acquired this 1.6% stake or 10 lakh shares in this small cap firm again, which we were discussing, the small cap space, and this stock has suddenly shot up. Already they have tripled from the IPO price was just 220 rupees, and the stock went up substantially within 3 months of making their debut on Dalal Street. What is your own sense, sir? Have you been reading into this KR and Heat Exchangers at all? The opportunities that still exist beyond the 3 months of substantial move that was being seen on this one?
Yeah, I think Sakshi, these are all SME companies, and as you know, in these SME companies, the entire floating stock is cornered by few, participants, and that's the reason you see that a price of 220, which was the IPO price, is now trading at 750 plus levels. So I think investors who want to take a longer term call have to time their entry in such companies at the right time. Getting into these stocks at these levels just because some celebrity investor has bought it may not be a very good investment kind of decision. So I think you need to be careful. But yes, there are several SME companies which are very very promising, which have got valuations also on the positive side. But I think you need to understand, unless you get a fair amount of degree of comfort on the promoter on the business, then only I think these companies can give you the the best risk reward. As far as KR and Heat Exchanger is concerned, the business is growing very rapidly. The product is very promising. But I think at these levels, I think one needs to be careful. Maybe you will not be able to make that kind of alpha in the next, say, 12 to 15 months. So I think it's at best a hold, but fresh buying definitely not advisable.
Okay, got that. Anything else in the recent IPOs that have come in the new year 2025 that you have watched out for, you applied, and maybe you were looking at a promising future right there, sir? We've seen Quadrant Future Tech, that's also up in trade today. Standard Glass came in, many others such came in, and they've been all seeing substantial retail investors. So the appetite is still large and growing, but is the IPO space looking promising at all?
No, I think, see, again, one needs to understand that, the IPOs are now getting oversubscribed beyond everybody's imagination. Normally, the levels were 100 times, but now you see 500 or even 1,000 times oversubscription. So, one uh, advice which I would like to give investors is that, purely don't go by these numbers. Normally, what happens is that, these companies get a kind of a jerk when the anchor investor sells in the first month, and after the third month exits the entire position. So you see a lot of volatility in stock prices here. But I think, yes, I think if you ask me the latest IPO, listed companies, then I think MobiKwik looks to be quite interesting. It's a very well established payment player. I think now they've tied up with Piramal Finance for personal finance. So I think, here there is a company which possibly has corrected from higher levels. Although here also the IPO price was about 278, and it trades at around 470 odd. I would say that if you have a long term view, at least the next couple of years, then I think a decent risk reward can be considered, because there are very few companies who can come and achieve this scalability, and obviously they have a large customer base which is rapidly growing.
Okay, MobiKwik looks interesting right there. How about the peer, sir? Paytm or PB Fintech for that instance?
No, I think, see, PB FinTech is basically an insurance play, and I think in India, even today, the insurance agents is the key, business driver. So I think offline business still constitutes a large portion of insurance business. So I think over the next, say, 3 to 5 years, online insurance policies could figure out as a key kind of a matrix for most of these companies. But I think, yes, I think they have a unique business model. Definitely, I think if an investor can give in, say, a couple of years, definitely I think you could see these kind of internet companies doing well. I think a better choice, Sakshi, would be the food app companies, because that is something which is growing rapidly. I think food eating habits have changed in India, And I think Zomato, Swiggy, these are companies which possibly would continue to grow. Of course, when they make their cash flows and when they become profitable is another thing. But I think markets are definitely excited on the kind of growth opportunities in this space.
Okay, got that. So that's as far as the new age tech space is also concerned and how you should navigate your moves right there. Let's also delve a little deeper. The oil and gas space is outperforming, sir, today, and we do know that a lot of it has to do with the uptick in Brent crude prices. They are entering its fourth week of an upward run up in the oil and gas in the oil prices. How would you really look at this current move there, and are you preferring any key segments there?
But I think in the oil and gas space, my sense is, the gas companies look much better. In fact, if you talk about the upstream companies like ONGC, Oil India, I think, these companies, the profitability is largely driven by the crude price. And I think once Donald Trump comes in, after the Israel-Hamas, war ending, there are expectations that maybe the Russia-Ukraine war could also end. And if that happens, then I think you could see a dip in crude oil prices, which eventually I think will eventually help the oil marketing companies, companies which are importing crude-related raw materials. So I think clearly the oil and gas space looks a little volatile. We don't know when this war will end. But as far as the gas companies are concerned, I think clearly players like Indraprastha Gas, Gujarat Gas, Mahanagar Gas, these are companies which are all basically very solid cash flow generating companies, and government is also encouraging the use of gas. So I think probably these could be better bets, unlike the pure crude companies either on the upstream or on the downstream side.
Okay, got that. As far as the oil and gas space is concerned, that's the kind of move that you are expecting. The other two pockets that I wanted to discuss with you, let's discuss the first one, which was an outperforming sector of 2024, pharma space. Is something that I wanted to discuss. Again, this will also be one sector because of its export oriented nature. It will be very important to see how Mr. Donald Trump's assuming office shaping of policies will impact the pharma industry as a whole in India. But lately we've been seeing a lot of focus on these CDMO spaces. What is exactly happening right now? Help our viewers really understand the changes that are occurring and how exactly should one really pick and choose the key pharma performers for their stock portfolio, sir?
No, I think CDMO is definitely a big promising opportunity. I think there are many players here. I think from the smaller players, you got something like a Piramal Pharma. Then I think Syngene also has a very large exposure here. In fact, some of the good companies which we believe would do well are frontliners like Sun Pharma, Lupin, even a Torrent Pharma. I think clearly, companies which are positioned on the US market, fortunately, there have been no regulatory kind of hurdles as of now, because there was a time when regulatory hurdles were very high. But now I think things seem to have settled down. So I think clearly, from the export market side, if the rupee depreciates, and obviously if US policies continue to be conducive, then I think you could see a lot of, incremental cash flows coming in from the export oriented kind of activities of these companies. So I think you got to be a little patient with these companies, because see, now one run up and one cycle of the uptrend in these companies stock prices have already happened. So I think now for the next move, you'll have to wait for what kind of policy changes come, from the US market. And I think that is going to be very critical. I don't think there could be any negative surprises, but we'll have to take it on a case to case basis. So I think pharma definitely would look interesting, but we need to be a little careful on selection and basically look at the right valuations, because valuations as of now seem to be fair to expensive. So I think probably a small market correction from these levels could probably provide a good entry point.
Okay, so that's as far as the pharma outlook is concerned. The other winning pocket that I wanted to discuss is real estate packs. Again, we are seeing the winners of the past also continue to surge higher. Macro tech developers, an outperformer of 2024, continues to garner more attention, despite the valuation also picture coming into front. How should one really view the opportunity here? Every time there is a FOMO because the stock prices go up, valuation keeps on inching higher. But is this the right time to make an entry into macro tech or some such stocks that have actually given similar returns?
No, I think real estate continues to be in a sweet spot, and I think despite interest rates being elevated, you see that inventory are sold pretty fast. In fact, most of the companies which have announced projects, the pre-sale number has been extremely robust, And this is actually evident in markets like Mumbai and markets like North India, typically Gurgaon. I think companies like Lodha, that is Macrotech in Bombay, Oberoi Realty, Mahindra Lifespace. Or for that reason, even companies like Anant Raj in Delhi. I think Anant Raj is a different business model altogether. They decided to enter the data center business 3 years back, and I think that is now the new sunrise area which most investors want to bet on. So I think data center is going to be a big component and big driver for them going forward. But overall, I think the real estate market is going to do well. I think we are going to see a lot of increase in the luxury, the mid-size, and the affordable segment. And hopefully, if the government announces some relief in the coming budget, then I think that would obviously complement the housing market, because housing is a very elementary need. And if some further relief is given to the real estate market, that itself would propel further demand. So I think I don't see any kind of price erosion, in markets like Bombay or North India, and that's the reason you're seeing that established players are seeing new projects being sold very fast and at very high premiums, which obviously looks surprising, but I think people are willing to pay a premium for these properties.
Understood. Well, thank you so much, Mr. Gorakshakar, for being with us on this special edition. There have been many important insights that you've shared in today's show, as you do always. So thank you so much. Truly appreciate your time with us. Hope you have a fantastic time, and we will see you around very soon when Mr. Donald Trump also assumes office. Then there'll be more interesting and exciting things to talk about too. Thank you so much. Appreciate your time. Okay, 23,200 on the Nifty, viewers, 110 points lower. We are still toggling around the same level. Choppiness has been the way as far as how the markets have traded in today's trading session. It's just a few large cap heavyweight counters that have sustained the kind of move, like Reliance Industries, for instance, holds above 1,300 odd levels as the top mover on the Nifty right now. You have BPCL, Hindalco, Coal India as among those metals, commodities kind of names that are actually doing well. Then you have BEL, defense names that have been doing well today, even railway space that have been buzzing, fertilizers, so that's the budget theme definitely in focus today. IT space has dragged with Infosys disappointing the street today. 1817 levels currently, 5.7% down. Axis Bank down. Kotak Mahindra, Wipro, and also Shriram Finance ahead. You can see all of those stocks which are down in trade. So IT as the top loser among sectors, 2.7% lower. Private banks 2.1% lower. That's the kind of drag, and of course Axis Bank has led to this decline along with Kotak. Then you have financial services that have dragged, PSU banks. All the three constituents of the Nifty bank are down and out. You can see autos that are down by 0.4% as well. This is amid the Bharat Mobility Expo that we've been seeing right there. But oil and gas, infra, metals, realty are the pockets that have held on to among sectors. When we look at the broader markets, some of the names that really shot up in trade, let me talk about some of them. Again, fertilizer pack, you have Gujarat State Fertilizers and Chemicals 6% higher. From the Realty pack, you have Suntech Realty 7% up in trade. You have Fusion Finance from the NBFC space that was up 7.5%. Strong moves on that one. Then you had even the hotel hospitality space buzzing. Remember, Kumbh Mela is on. TGB Banquets and Hotels, that's up in trade. Then you also have stocks like NBCC, 8.5% higher in trade. Hutco is also up and about from the development space in the PSU pack. That's also buzzing. Then you also have stocks like Ashapura Minechem, 10% higher in trade. Quadrant Future Tech, that's another one. Travel tourism theme, BLS International Services, 10% higher. Strong move on that one too. Bajaj Healthcare, Kitex Garments, these are the pockets that are actually buzzing. On the Nifty Next 50, are there any other interesting names? HAL tops the list. You have Macrotech Developers, Godrej Consumer, so the consumption part also coming strong today. Siemens, Zomato, IRFC. These are the pockets that are buzzing as far as the Nifty Next 50 names are also concerned as of now. All right, 3:30, 23,201. The Nifty screen has frozen, 109 points lower in trade. As far as the move on the Nifty is concerned, the Nifty Bank shut shop 1.4% lower, 727 right now. As far as the Nifty bank is concerned, 48,551 as the closing level on the D Street. The mid and the small caps managed to pull up and outperformed the benchmarks. 0.1% each for the mid and the small caps that rallied in trade today. The Nifty losers, like I mentioned, have been clearly Infosys, Axis Bank, Shriram Finance. Disappointing earnings definitely weighing on the sentiments right now. We'll wrap it up at that. This week has been a painful one, rather, for investors as well. But we'll hope that things improve into the next week. It's going to be an important one, with a lot of action coming in from the US, with Donald Trump's assuming office. That will be important to see how things shape up and whether the markets will finally get a direction to react to the statements that will come out from there as well. With that, we wrap up. Many thanks for joining in, viewers. But stay tuned on to Business Today. A lot more beyond the market coverage also coming up on your screen. Stay tuned.
The attack on actor Saif Ali Khan left him with multiple injuries, including a knife